Hello friends, welcome to Veranda CA. Today we're going to do a quick revision of chapter number 1 of your paper 7 EIS-SM. So our chapter number 1 talks about automated business processes, and it is very relevant when it comes to the real life application of most of the concepts discussed in this chapter. So are you ready to come with me on this interesting journey? Let's take it quickly. So just to begin with an interesting story, we have Nokia and Ericsson. If you remember, one of our favorite companies as we grew up, the products that we all loved the most, that every member of the family, wanted to acquire those products, were the products made by Nokia. Now, what happened is Nokia and Ericsson got the microchips from a same company. The supplier was the same who supplied microchips to the company. But there was a fire in that factory and Ericsson waited out so that this issue would be sorted, but Nokia acted very swiftly. And because they acted swiftly, they went on to move to different suppliers, and that would be a complicated supply chain management process, but Nokia did it because they wanted to stay ahead of the game, and that happened. Ericsson lost a lot of its market share to Nokia. So, having said that, the success of any organization, guys, depends on what? Depends on the ability to respond to the dynamic environment. The environment around us is changing rapidly. The ability of any organization to adapt to those changes. Right now, there are so many technological advancements that are coming. We're moving towards digital currency. We're moving towards digital marketing. So, is the organization ready enough to adapt to those changes? Okay. So, fast decisions. What is EIS? What is Enterprise Information Systems? It is the technology platform to integrate and coordinate. The functions on a platform. So, it's the technological platform to integrate and coordinate the functions, which means that all my systems, my processes, my softwares, all of that form a part of enterprise information systems, including the people who work in an organization. And if I have a very advanced EIS, definitely my productivity of the organization is going to increase, because I am going to reduce my time, efforts and cost. I'm going to reduce my time, efforts and cost. With that, we begin with what is BPM. Guys, BPM, Business Process Management. Now, Business Process Management helps in achieving 3 E's. 3 E's: efficiency, effectiveness, economy. Efficiency, effectiveness, economy. You all know that effectiveness means achieving the goal. Efficiency means with the best resource optimization. With the least resources, you achieve the goal, resource optimization. And economy means reduction in time, efforts and cost. Reduction in time, efforts and cost. So, 3 E's of BPM. Come on everyone. Effectiveness, efficiency, economy. Moving on to the next model of BPM. It comprises of the top management, middle management and operational management. Now, this question can be asked as, I would request all of you to maintain a question and answer book through this session. We're going to divide the entire chapter into question and answer, so that, and after you write down the questions, let's follow this trick. After you write down the questions, draw a smiley face after the question if you're able to remember the side headings, because this is a revision class. We've already covered all of it in our general classes. So, this is a revision class. If you're able to recollect, then draw a smiley face after the question. And if you're able to even remember the inner points, then draw a smiley face and a heart. Yes, can we do that? Yes? Alright. So, question number 1 would be 3 E's of BPM. Question number 2, categories of BPM. Question number 2, categories of BPM. Now, categories of BPM, OSM, Operational Support Management. Operational Support and Management. Operational level. Let us take any organization, any new age organization for that matter. Let it be a very sophisticated fruit and vegetable shop. Yeah. So, you walk in, you have the sales people there who interact directly with the customers, who provide value to the customers. Now, they are known as the operational level. who actually execute the strategies framed by the top management. Clear? So operational level are the people who actually provide the benefit to the clients. So operating support processes involves your finance, HR, marketing departments. Yes, all of these who support in getting the policies or strategies from the top management and communicating it to the operational level. Are we clear about that? Awesome. And then we have the management process, where we have the management process who are the board of directors, all the CEs, CFOs, CEOs, CTO, all of them who actually are in the senior management, who decide what are the vision and mission statements for the company, who decide what are the goals for the company. So we have operational process, which is also known as primary process, deliver value to the business. All right. Then we have our supporting processes. They are known as secondary processes. So operational process known as primary, supporting process known as secondary. You have your human resource, technology, finance, facilities management, legal department, your CRM, knowledge management, analytics. All of these functions happen at the managerial level, which is known as supporting processes. Next, we have our management processes. Measure, monitor and control the activities. Measure, monitor, control the activities of the organization. Do they provide direct value to the customer? No. Do you think that the CEO is going to come and sell vegetables to you at the counter? No, that's going to be done by the operational management. So this management process do not directly interact or do not directly provide value, but definitely their strategies have a significant impact on the level of customer satisfaction. Okay, so we have vision and mission strategies, all these mergers, acquisitions, all the compliance strategies, all of that done by the senior management. Now, business process automation. Business process automation. What is the meaning of business process automation? Imagine that I get a mail on my company mail ID and that mail is for an order. My systems are so smart that they understand that this mail is an order mail and they immediately make the pro forma invoice, they make the they send it to the customer, they get the receipt, they record the receipt in the system, yeah, they make a proper invoice, they send it to the shipping department and then they collect the money, right? So an entire process is done without much human intervention. That is known as business process automation. What is the meaning of automation? Automating things. Automating means making it technologically able to do it by itself, making the systems able to do things by themselves. So technology enabled automation of activities. Tech enabled automation of activities. Guys, I think we're on our question number 3. What is BPA? I hope you're writing that down in your book. What is BPA? Technology enabled automation of activities. Automate the processes to work effectively and efficiently, and that helps in reducing the time, efforts and cost. We've already discussed that. Business process automation means analyzing, documenting, optimizing and then automating the business functions. So first you need to know what is the process so that you're able to automate those processes. Okay, so these are just examples how today's BPA softwares, what are the functionalities they give us. They provide workflow strategies so that we can implement that in our business. Just drag and drop the say email to the software and all the subsequent processes will be done automatically. Next is document generation. Then we have some mobile apps to collect data of the customers. Robotic process automation. This is an emerging technology, robotic process automation. We have process intelligence, where using in a process you put all the real-time analytics, all your data analytics techniques that we're going to learn in our chapter number 2. And then we have machine learning. Machine learning using of natural languages, your AI, your where the systems learn by themselves. Good. Question number I think 4. Question number 4 will be factors affecting BPA success. Factors affecting BPA success. Factors affecting BPA success. Confidentiality, integrity, availability and timeliness. Okay, so we have 4 things here, factors affecting BPA success. Confidentiality, integrity, availability and timeliness. Confidentiality, integrity, availability and timeliness. Now tell me, what is confidentiality? Confidentiality means see and integrity means do. There's some confusion as to the difference between confidentiality, integrity when a student studies. So please note that confidentiality means no one should be able to see the data that they are not supposed to see. So no one is supposed to see data that they do not have access to. Integrity, no one is supposed to do means no one is supposed to edit the data. Unauthorized editing of data should not happen. Integrity. Availability, data should be available at the right time when I need it. Will it help me in any ways if I ask you for a data and you give it to me after 4 months? No. I need the data right now so that my decisions can be made now. And then we have timeliness. Availability of data means data is available when it is needed. Timeliness, it is available on time. Clear? Factors affecting BPA success, very easy. Confidentiality, integrity, availability and timeliness. Please mark a caution symbol here because there is, you need to remember that CIAT is the key for this question. Factors affecting BPA success. CIAT. So how are you going to mark? So questions where you got to be extra careful. Otherwise, you need to mark it with a, let me teach you a skull symbol, okay. So I have 1, 0, 0, 1 and then 1, 0, 1 and I link it together. Okay, so when you draw that in your book near the question, you know that you got to be extra careful because it could be confusing in the exam. So it's a very easy question, but you got to be careful because of the link between the question and answer. Clear? Let's move on to the benefits of BPA. Guys, benefits of BPA. The key for this is government QRR. GOVT, government QRR. That is the key, you know, quick response, the QR code, quick response. So, government QRR. Will you remember? Now, G. G stands for governance and reliability. Governance and reliability means that the top management can rely on the data which is given by the systems and make the strategies accordingly. So, they can rely. Governance means the top management strategies based on their reliability of the data which is given by my BPA system. GO. O stands for operational efficiency. Operational efficiency, we already discussed, reduction in time, cost and efforts. V. V stands for visibility. Visibility, when I'm booking a delivery through Zomato, I can see that in how much time it's going to reach the destination. So, visibility of the process. You know where in line is the process exactly standing. T. Time saving. It saves a lot of time. People do not have to manually do the task. The systems will do it for them. So, GOVT, governance and reliability. O for operational efficiency. V for visibility and T for timeliness. QRR. Q stands for quality and consistency. Quality and consistency. So, if I go to an ATM and withdraw money versus if anyone, say the chief minister or a famous actor, if they go to the ATM withdraw money, will the process be different for them versus the process for me? The answer is no, because machines are meant to do work in a very consistent manner. So your work in the organization will be done consistently and the quality will remain from the start to the end. If it's a human being, they get tired at the end of the day, right? But with systems, that's not the case. So quality and consistency. QRR. R stands for reduction in cost and another R stands for reduction in turnaround time. Turnaround time means the time taken for any process to get completed. Turnaround time. Okay, what is the time between me ordering an item and me receiving it? That would be the turnaround time. So, the turnaround time is less because the machines are equipped to do the task in a timely fashion. Very good. So, benefits of BPA, guys. GOVT QRR. GOVT QRR. Want to revise the answer once? Okay. Benefits of BPA. All of you tell it along with me. GOVT-QRR. G for governance and reliability. O for operational efficiency. V for visibility. T for time saving. Government, Q for quality and consistency, R, reduce turnaround time, reduce cost. Reduced turnaround time, reduce cost. Wonderful. Next question in your BPA is, what are the processes that needs to be automated? What are the processes that you're going to automate? Now, tell me, if I want to visit the dentist, yeah, he has to check my tooth, he needs to repair it. Can I automate that process? Can the machine check what's the problem? Can a machine do it? The answer is no. Can I automate a process which requires high level of advice, consulting, knowledge, advice? No. So tacit knowledge cannot be automated, or specialized knowledge cannot be automated. We need the human brains to do it. Yeah. So your values, your knowledge, your expertise, all of that cannot be automated. So there are only a few set of processes that can be automated. You need to know what are those processes. Yes? Are you ready? Okay. Now the code for this is high multiple time compliance, significant impact. High multiple time compliance, significant impact. High. What does high stand for? High volume of repetitive data. So in case a task is there where repetitive things are to be done, every day one entry needs to be made in the ledger, yeah, some cash needs to be counted and given, yeah, in that case, please automate that function because it is repetitive task. You can teach the machine how to do it. High volume of repetitive tasks. Okay, next is multiple. Multiple people are required to do a activity. In case multiple people are required, you will be incurring a lot of cost on hiring and training the employees. So in order to save those costs, build in systems that can do that. Okay, next is high multiple time compliance. Time means time sensitive process. In case any process, for example, in case it's done manually, people go on leaves, yeah, they have their vacation modes, they have some sick leaves, yeah, so can the process wait for them to come back or someone else to take over immediately? No, it is time sensitive process, it needs to be done on time. For example, if I go to an ATM, will I wait you know, in case ATM was not a machine, it was an individual, and if he was on leave, can I wait till the next day to get the money? No. All these are urgent activities. Yeah, we need it immediately. So time sensitive process, compliance and audit trail. In case you want a compliance or an audit trail to be maintained for the transaction, what is the meaning of audit trail? Reconstruction of events. Yeah, you want to know that who is the one who passed this entry, who is the one who approved this entry, who is the one who processed it, reviewed it. If you want to know all of these details, it is better that instead of going pillar to post asking people who did it, what you can do is put it in the automated processes. Time compliant and significant impact. So processes that have a significant impact on other processes. It's better to automate those processes so that the other process is also not hampered. Clear? Very easy. Processes that needs to be automated. High multiple time compliance, sensitive, significant impact. Okay, come again. High multiple time compliance, sensitive impact. Clear? Are you all clear with this? Can we move on? One more revision of which process needs to be automated. Okay. H for high. Multiple people, high volume of repetitive tasks, multiple people to execute the task. Time sensitive processes, compliance and audit trail is required. And the fifth one was having significant impact on other processes, Clear with that? Can we move on? Guys? Yes? Awesome. Next question here is challenges in BPA. The keyword for this is AIDS. AIDS, A stands for automating redundant processes. So processes that are redundant, what is the English meaning of redundant? It means not useful, means useless. Okay, so processes that are not useful, then it's better not to automate it. You can just have it, you can ignore it or have it done manually. Next is tacit knowledge. We already discussed tacit knowledge. You cannot automate those processes. Any process which is highly complex, difficult to draw in a flow chart or a data flow diagram, difficult to encode or automate, such processes cannot be automated. Challenges in BPA means what are the hurdles that I'm going to come across when I'm going to implement the BPA in my organization. So challenges, AIDS, AIDS. A stands for automating redundant processes. I stands for implementation cost. I stands for implementation cost. So in case you want to automate a function, you're going to do a cost benefit analysis. So say the value of an asset which is there in my house, say I have a locker, in that locker there is 25,000 rupees. Now, should I set an alarm for the house, an alarm or a biometric or some CCTV specialized camera? So, should I, that camera or the system, entirely automated system, costs about 5 lakh rupees. Okay, so for 25,000 in my locker, should I set a system which is worth 5 lakhs? The answer is no, it's ridiculous. So, implementation cost is very high for maintaining and implementing any BPA software or system. Implementation cost. And next I have defining complex processes. D for defining complex processes. Any process that is very hard to encode, it's going to be a challenge, a major challenge for the programmer, for the management to explain the entire process and to automate it. And finally I have S, staff resistance. People will not be willing that the organization goes in for automation. Why will people not be willing to do that? Because there's a loss of job. What will I do if my machines do all my work, right? And also there could be a significant fall in my decision making or my power in the organization. So 4 things in challenges in BPA. All of you aids. A for automating redundant processes. I, implementation cost. D stands for, D stands for designing complex or defining complex processes, and S stands for staff resistance. Staff resistance. So 4 points in my challenges in BPA. Clear? Challenges in BPA. Now finally, BPA, last question in BPA. I hope you're writing the questions in your question answer book. Final question is steps in BPA implementation. So we have 8 steps in BPA implementation. Why do we need to implement BPA? So this is the problem statement. What is the problem that I'm having? My customers are unsatisfied. My debtors customers. My debtors follow-up is very poor. My supplier payment is poor, which is why I'm missing out on some discounts that they would give on timely payments. Okay. The cost that I'm incurring for my raw materials are very high. So what is the problem statement that is draining my money? All the problem statements are linked in a way to the finances. Okay, what is the problem that I'm having because of which I need to automate the business processes. Okay, so first write down why. Next is rules and regulations. Rules and regulations. So I have my local laws, I have my state laws, and I have my central laws. Local laws, state laws, and central laws. And then I have I have to adhere to all the laws. I can also have my internal corporate policies. Okay, internal. For example, say that I'm not supposed to accept returns after 7 days. 7 days after that, no refund, no exchange. But my system is not designed in that way, and they are even accepting returns after 25 days. That should not happen. So what are my corporate policies versus and what are my industry policies? As an industry, they have certain guidelines and rules that they should all follow. So I have to keep in mind all these rules before I implement any or before I automate any process. Document the process. Okay, in a flow chart or in DFDs, data flow diagrams, document what you need from the software. Okay, so you're going to write what are the reports going to look like. Is it going to be in PDF format? Is it going to be in Excel format? Right? Document the process. Define objectives and goals. Now, my goals and objectives need to be smart in nature. Smart. S for specific, M for measurable, A for attainable, specific. I need to be clear that, okay, I want to clear my CA exams in May 22. May 22, I want to clear my CA exams. Okay, so I need to be specific about that. Measurable. Okay, I've so far finished 6 subjects. 2 subjects yet to brush up and revision is pending. I need to quickly plan for that. Attainable. Is it attainable to finish 2 whole subjects? Yeah, now. Probably if I put in a few extra hours or if I do smart learning, it is possible. So, attainable. Realistic. Say you have finished only 3 subjects out of 8 subjects and you have 5 more to go. Is it realistic to finish that in 1 month and aim to clear the exams in May? The answer is no. So, it needs to be realistic. It needs to be timely. Okay, you need to have a specific time frame where you want to do it, when you want to achieve it. So, I need to define for every organization what are my SMART goals. Engage the business process consultant. Now, this consultant that I engage for putting in the systems, he should be a very knowledgeable person, experienced person, skilled at his work. He should be a good consultant because a good consultant can give me a good system. Calculate the ROI, return on investment. I need to do a cost benefit analysis and understand if it is worth implementing the BPA system. Development of BPA. Development of BPA means I finally design that BPA and test the BPA. Develop the BPA, test the BPA. Clear with that? Quick revision guys, come on. First one, steps in BPA implementation. There are 8 steps. First step, why. Second step, rules and regulation. Third step, document the process. Fourth step is define the goals and objectives, SMART goals. Define the goals and objectives. Fifth step, engage a business process consultant. And then I have ROI. ROI, I have to find out what is my cost, what is my benefit. Next, after ROI, develop the BPA and test the BPA. Yeah. Clear. Steps in BPA implementation. Number 1, all of you repeat with me. Number 1, why. Number 2, rules and regulations. Number 3, we have document the process. Number 4, goals and objectives. Engage a business process consultant. ROI. Develop and test the process. Develop and test the BPA system. 8 points there. Are you clear? Yes. So, we're done with BPA exercise. Yeah. If you've learned it and you know it, clap your hands. If you've learned it and you know it, clap your hands. Okay, very good. Now, let's move on to our next topic, asset. These are all definitions, basic, easy definitions. Let's quickly do it. And any asset to the organization means something of value cannot be easily replaced. Something of value cannot be easily replaced. Okay. Next is vulnerability, missing safeguards. Vulnerability means, for example, I stay in a house which has no lock on the door, no alarm bell. So, vulnerability means missing safeguards, things that are weaknesses in the system. And a vulnerability exposes my asset to threat. Clear? A vulnerability means a missing safeguard exposes my asset to external threats. Weak passwords, yeah, passwords like 123456, PASS, WORD, leaving the door open, pen drive access, all of that. Next is threat. ECE with the potential to harm the entity, harm the asset. ECE stands for entity, circumstances and event with the potential to harm. How? Threat by unauthorized access, by denial of service, by modifying the information, and if there is any asset, then threat will be there. If there is any asset, threat will be there. Protect assets to prevent the threat. Finally, exposure. What is the extent of loss? Okay, extent of loss that the company has to face. Likelihood, how probable it is that the risk or threat will occur. Attack, gaining unauthorized access. So, now all these definitions are pretty simple. So, we're just going through it very fast. Malicious or intentional fraud. Malicious or intentional fraud. Yes, guys. Countermeasure. The TAPD technique, action, procedure and device. technique, action, procedure and device that reduces the vulnerability. So, for example, vulnerability is that I do not have an alarm bell. Countermeasure would be that I put an alarm bell, I put a CCTV camera. So, I put all these devices so that my vulnerability is reduced. Clear? We clear? Strong passwords. Now, what is a risk? It's an event that results in significant deviation from a planned objective. Event that results in significant deviation from a planned objective. All right. Resulting in unwanted negative consequence. It's important that risk is defined or risk leads to a negative consequence. In case it's a positive consequence, there could be significant deviation from the plan, but it could be in a very positive approach, right? In that case, it is not termed as a risk. Sources of risk, you all know risk, pestle, if you remember your economics, pestle analysis, all these are the sources of risk. Characteristics of risk, it is it certain or uncertain? It is uncertain. There could be some loss, you don't know what is the loss. Now, what is risk management? Important, what is risk management? It is the process of assessing risk, taking steps to reduce risk and maintaining the acceptable level of risk. Maintaining the acceptable level of risk. Now, what is an acceptable level of risk? So, at home, the food that you're eating, it has, usually a level of salt, okay? Consistent level of salt for all the meals. Now, in case suddenly one meal, someone else has cooked, okay, the salt level is less. If it's almost equal to nil, will you be okay with that? No. Okay, if it's little less, will you be okay with that? Yeah. Okay, let's go with it. Okay, if it's a little more, are you okay with that? Yeah, just a little more, are you okay? But if it's too much on the high side, can you eat that food? No. So, there is some acceptable level in everything. So, even under risk, even in an organization, you have certain events, but the loss of that, you can bear it because it doesn't matter much to you. Okay, doesn't matter much to you. So, you have to identify in your enterprise what is the acceptable level of risk. Identifying, measuring and minimizing uncertain events. So, risk management leads us to a concept called as ERM, Enterprise Risk Management. Enterprise Risk Management. Now, your risk can be into, before we go to ERM concept, let us see the various types of risk. You have your business risk, technology risk and data related risk. Business risk, technology risk, data related risk. Guys, are you ready? Can we go into this? This is a very important concept, business, tech and data related risk. All right. Now, when we talk about business risk, there are 6 types of risks that are being discussed in the book. So, one is strategic risk. As we are doing, please try to memorize or remember the side headings. Strategic risks. A strategic risk means anything that does not help me to achieve my goals. Okay. After strategic, I have financial risk. Financial risk, interest rate becomes high. Anything that has a negative financial impact. Okay, strategic, financial, regulatory and compliance. Regulatory and compliance risk. If I don't adhere to the laws, then I will have to pay fines and penalties. So, regulatory and compliance risk. Then I have operational risk. Very important. Risk due to failed internal controls. Please note that this internal controls. Operational is for internal controls and strategic could be any other event which is not related to internal controls. Strategic could be an external event also. So, operational risk related to the failure due to failure of internal controls. And then I have my hazard risk. Hazard risk, earthquake, fire, theft, hazard risk. I can insure them also. Yeah. And finally, I have my residual risk. Residual risk is the risk that remains even if I have implemented all the controls that are possible on earth, even then there is some risk that remains. Can any system or can any policy guarantee you that it's a foolproof policy and there could be no risk after you implement that? No. People somehow find the loopholes. So there is some sort of risk that always remains even after all the policies have been implemented, and that is known as residual risk. Residual risk. Okay. Then we have various types of technology risk, and then this is an amended portion here. Amended as in it was covered under chapter number 3. They have brought it in chapter number 1. Data related, they have just changed the positioning of the concept. Data related risk. Now 3 types of risks. Number 1, business risk, tech risk, data related risk. Business risk, tech risk, data related risk. Business risk, tech risk, data related risk. Okay. Now come on. All of you tell me business risk, strategic risk, financial risk, regulatory and compliance risk, operational risk, hazard risk and residual risk. Very good. Now strategic risk talks about goal, suppliers not supplying to me any goods, market conditions, corona time lockdown, yeah, no demand in the market, reputation. Now failed strategies, brand damage, all of these are the consequences. So it's brownie points for examples. Alright, financial risk, having a negative financial impact. You can write your own examples. Fines and penalties. What is the meaning of SPDI? Sensitive personal data or information. If I violate that, yeah, I am liable under section 43A of Information Technology Act 2000. So all these are the fines and penalties coming under regulatory risk. Then I have my operational risk, inefficiency in internal control. So it could be inadequate or it could be not operating efficiently. Not operating efficiently. It's adequate but it is not operating only properly, not operating efficiently. Alright. Next I have hazard risk. I have my impairment of assets, I have my fire, I can take in insurance against that. Next is residual risk. Residual means risk remaining after all the controls or countermeasures are implemented. Some risk is still there. Now what do I need to know? Should I just ignore that and go on with life? No, I need to monitor that it is at an acceptable level. If not, then I need to have more controls to mitigate that. So I need to monitor that the residual risk is to an acceptable level. Very good. Next we go on to technological risk. I want you to all remember this visually with the help of these diagrams. So system is not working, suddenly system crash, all the data is unsaved, not saved, whatever you're working on. So downtime, technology failure. Okay, I have a Walkman or some DVD cassettes. Okay, all these are obsolete technology. That is also a technological risk. So you need to be sure that your technology in your into your organizations are updated and kept as per the latest standards. Next I have complex system and different controls for different system. Complex system is one thing and different controls for different systems. So here I have 4 points, all of you without seeing the screen. Point number 1, downtime or tech failure. Point number 2, obsolete technology. 3, complex process. Point number 4, complex process and different controls for different processes. Different controls for different processes. Point number 5, vendors. Okay. Now, so suppose I'm getting my software from a third party. Get my software. Now, this third party one day says that, okay, I am bankrupt. I am shutting down all my servers. I'm sorry, I cannot sustain. All my data is there up on the cloud and it's with you. If you go away, then what happens to my data? So, depending on the vendor and outsourcing of IT services. Now, what if they do not provide me any software patches, any upgrades, updates? Then I will be at a loss. So, vendor dependence, vendor outsourcing. Vendor dependence, vendor outsourcing. Point number 5 and 6. Next, I have segregation of duties. SOD controls. Segregation of duties means that the maker-checker concept needs to be there. Maker-checker concept. Finally, I have cyber fraud. You know, so many things happening through the internet, credit card fraud, debit card fraud, all of these things happening. Cyber fraud, also a tech risk. Next is internal employees, alright. So, collusion and some leak of information from the internal employees. All of these are frauds or risks due to employees within the organization. Social engineering. What is the meaning of social engineering? pretending to be a trustworthy employee, trustworthy person, and getting information from employees. Okay, I pretend to be a well-wisher or a friend and I try to extract information from the employees of the company. Social engineering. Social engineering. And using that information, I can do many do a lot of harm to the systems. Next, I have the governance, top management. The governance need to be ahead of the game. They need to understand their systems. If they give up suddenly saying that it's too complicated, we cannot handle it, then it's going to be a major risk. Documented business processes. All the processes, if they are not documented, it could lead to a major risk because you have so many digital assets across the organization. You need to have all of that documented very well. Okay. So, technological risk, do you want to revise that once? Revise technological risk, all of you. Yeah. Point number one was downtime. Downtime or server failure. Point number 2 was obsolete technology, old technology. Point number 3, complex processes, different controls for different processes, different controls for different processes. Vendor dependence, vendor outsourcing. Vendor dependence, vendor outsourcing. Then I had segregation of duties, cyber fraud, social engineering, and governance top management, and the last point was documented business processes. Yeah, so I can remember, all of us can remember a few points. Most of the points, yes, very good. Next, we move on to data related risks. Data related risks. Now, this includes physical access and electronic access of data. Physical, someone comes, steals my laptop and runs away. Physical, and someone goes into my systems and changes the data. Logical. Physical and logical access of data. So, number 1 here is data diddling. Data diddling means changing the data that is before or after the system. Now, we have done in detail all of these data related risks in a video, the link of which will be provided in the description box. So, we have discussed all of this in detail. We are just going to brush up soon. Data diddling. Next, we have bomb, bad code in the system. And then we have worm. Worm, it can spread across through various systems through networks. Remember? Data diddling, bomb, worm. After worm, we have our Christmas tree exec. Christmas tree exec. Rounding down, salami technique. Trapdoor, spoofing. Trapdoor, spoofing means acting as being a disguising a communication from an unknown source as being from a known source. So, act as if you are from a known source, that is spoofing, used to gain access into the personal information and misuse it. Next, we have asynchronous attack, important question, the various types of asynchronous attacks. Now, what are asynchronous attacks? When the information is being sent and when it is received, there is some amount of time difference. Now, in this time difference, I insert some software or virus and I steal this data which is going from the sender to the receiver. So, they are small pin-like insertions in the telecommunication network. It is due to the timing difference. 4 types: data leakage, subversive attack, piggybacking and wiretapping. Data leakage, subversive attacks, piggybacking and wiretapping. Yeah, data leakage means you take the data, copy it in a take printouts and run away, copy it in a pen drive and go away. Data leakage. Subversive attack means intruders with important information that is being transmitted, and the intruder can attempt to violate the integrity of some components in the subsystem. So, I install a software and that software has the capability of changing the information that is going. Violate the integrity of some of the components of the subsystem. Wiretapping, just like phone tapping, where you can just listen to the information like that. Wiretapping means spying on information that is being transmitted. Very simple. Piggybacking. This is the act of following an authorized person through a secured door. Following an authorized person through a secured door. Or electronic attaching to an authorized. Please note, it is the act of following an authorized person through an authorized door, to a secured door, which means that all the controls are there, but this authorized person is helping me sneak into the organization. Piggybacking, as the name suggests, piggybacking. Very good. Moving on to the, so quickly recap of the risks that we discussed. 3 types of risk discussed in chapter number 1, business risk, technology risk and data related risk. Under business risk, we had 6 types of risk. Under technology risk, we have various types, you have to remember with the diagrams. And under the data related risk, we have few concepts such as data delaying, asynchronous attacks, bomb, worm, Christmas tree exec, yes, spoofing, trapdoors, all of that, right? Next, we have your risk management strategies. Risk management strategies. Now, why is it strategies? Because this answer has all the words starting with T. All the words starting with T. First is tolerate or accept the risk. Tolerate or accept the risk. Okay. So, for example, it's talking about this is a risk which will lead harm to 3,000 rupees. So, for an organization that is doing big business, 3,000 rupees may be a risk that they can tolerate. Okay. So, they do not have to really put controls or put their mind and put expensive controls there. They can tolerate or accept the risk. Transfer or share the risk. Now, when I can share the risk with any insurance company, it is known as transfer or share the risk. Treat or mitigate the risk. Treat or mitigate means you put in proper controls and address the risk. You treat it, you put a proper treatment for it. Next is terminate or eliminate the risk. So, I have to terminate or eliminate. It's a very dangerous risk for my organization. If that risk happens, then I cannot survive. Okay. For example, there is a risk of ransomware that can come on my all the systems and say that there's a ransomware that asks me for paying money in Bitcoin. Okay, and they are saying that only if you pay this amount, they will release all my work files. All my work files where all the data that I've worked on for the entire 1 year is there in those work files, and a ransomware comes. Can my organization afford that? Say if this the ransom that they ask for is very huge, then no, I cannot. So, I need to make sure that all the systems that I put in my to safeguard my files are there to terminate that risk. There is no way that any ransomware can come into my system because I have put in the best of the security measures. Terminate or eliminate the risk. Okay. Tolerate the risk. Tolerate means accept the risk. And I'm going to accept it because the probability is very low and the impact that it has on my organization is very low. Clear? You need to review it periodically. Terminate the risk means eliminate the risk. Transfer the risk, share the risk, use your risk management strategies. Risk management strategies like transfer the risk, you can use outsourcing, insurance, all of these strategies to transfer the risk. Next, I have treating the risk. Treat का मतलब क्या होता है? What is the meaning of treating the risk? Mitigate the risk, have various risk management strategies to put in place suitable controls. Right? Now, there was an Enron scandal in the US and the entire government was shaken that how such a big fraud, it is known as the world's biggest fraud, how it could come here in a country as developed as the United States. So, when this scan happened and when the auditors were caught in manipulating the accounts, that's when there was a new guideline born which is known as SOX. So, next we are going to do SOX. This is about the case study of WorldCom. Similar, a lot of figures in the balance sheet manipulated, yeah, highly inflated balance sheet, inflated profits. Now, all of that was possible by the top management. So, in order to curb that or to restrict the top management to from indulging in such practices, we have something known as ERM, Enterprise Risk Management. What is Enterprise Risk Management? It is the process by the board of directors, process that is planned or executed by the board of directors, but it should be executed or followed at all levels in the organization, where you identify events and manage risk within its risk appetite. Risk appetite, it could be tolerable level, acceptable level, okay. Now, everyone wants to provide values to the stakeholders. Now this ERM is very, 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 very important. If you look at the annual report of any company, say a big conglomerate like Tata, say for example Tata Motors. So if you go and look at the balance sheet of Tata Motors, you will see an entire section on risk management strategies, on how they have, you know, identified the risk and what are measures or controls that they've put to mitigate that risk. They have all of that documented. So it is definitely very important even in real life application. Now, while implementing controls, we should all be aware of the processes, the technology, the risk appetite of the company, and then this was born in the United States, Sarbanes-Oxley Act. It talks about the implementation of and review of internal control with respect to financial statements. Internal controls with respect to financial statements. Okay, so it talks about doing a financial audit. Financial audit. Clear? What is Sarbanes-Oxley Act? Sarbanes-Oxley Act. Now, if you ask me if this is applicable to Indian companies, the answer is this is applicable as a good method to follow, good business practice all over the world. They have come up with something called COSO, Committee of Sponsoring Organizations, COSO Internal Control Framework, where all the guidelines for internal control are there. How this is adopted in the Indian law would be in the clause 49 of the listing agreement. Clause 49 of the listing agreement has taken many clauses from Sarbanes-Oxley Act and COSO. Alright guys, let's move on to the next question. What are the benefits of ERM? What are the benefits of ERM? Now, the key word for this is story of a man in the capital city of Delhi. Story of a man in the capital city of Delhi. Are you ready? Okay. So, we are going to learn the side headings through this keyword, through this example. So, now, man is born as a child, small child. Child always keeps feeling hungry. Appetite. Okay. Then, after his mother feeds him very well, then he grows up a little. Growth. Okay. Then after he's in nearing his teenage, then there are certain, he starts to speak the language, certain responses that he gives. Some are good, some are not so good responses. Okay. And then he responses, and then at this age, the parents are scared. They want to have all the parental controls in place so that the losses and surprises are minimized. Losses and surprises are minimized. At this age, they are scared. Okay. And after that, he reaches a age and he finds his partner. Okay. So, he finds his partner. He has to cross, as in he has to take care of another gender. Cross. Okay. After that, there could be some ups and downs between the daughter-in-law, the mother-in-law. Okay. So, this person, this man, he needs to give good responses in order to keep both of them happy, the wife and the mother. Yeah. So, integrated responses. Integrated responses. Right. Finally, he is a very, very wise man. Yeah. So, he is a wise man. Now, he has learned all the tricks of a good, happy life. So, he is able to seize all the opportunities. Seize opportunities. Seize opportunities. And at this age, he has invested his earnings into like he's kept some for his, remaining life. He's kept for his children. He's invested in properties. Yeah, he's invested in some financial assets. So, he has put his money in at good places. So, seize opportunities and capital. Rationalize capital. You can remember this with this, or in the capital city of Delhi means capital. Rationalize capital. So, now the point number 1 is appetite. Okay. Appetite, find out the risk appetite of the company. Align risk appetite Align risk appetite with strategy, with strategies of the company. Growth. Link growth, risk and return. Link growth, risk and return. Then responses. Provide integrated responses to multiple risks. Provide integrated responses to multiple risks. Next, what? He grows up a little more. His parents are scared. And they want the losses and surprises to be minimum. Minimize operational losses and surprises. And manage cross-integrated risk. Manage cross-integrated risk. Then we have cross-enterprise risk. Manage cross-enterprise risk. Then we have integrated responses to multiple. He needs to take care of what to tell his mother, what to tell his wife, and he needs to give some diplomatic answer where both of them are happy. So, provide integrated responses. After that, seize the opportunities and rationalize capital. Seize opportunities and rationalize capital. So, now we are doing benefits of ERM. Benefits of ERM. Benefits of BPA, government QRR. Benefits of ERM, story of a man. Clear with the distinction? Okay. Align risk appetite and strategy. Second point, all of you tell me the second point. Link growth, risk and return. Link growth, risk and return. Third is on, he grows up a little more, he gives responses. Provide enhance risk response decision. Enhance risk response decisions. In that I need to decide whether I need to turn back, I need to treat the risk, I need to transfer the risk, I need to tolerate the risk, I have to decide all that here. Minimize the losses and surprises. Minimize the losses and surprises. By having controls, I can minimize the different types of threats that can occur in the entity. Manage cross-enterprise risk. Sometimes a risk that happens in the finance department may also affect the sales department. Okay. So, I have to manage the cross-enterprise risk. Integrated response to multiple risk. Integrated response to multiple risk. All risks coming together, have some controls that can provide one response and eliminate all those risks. Seize opportunities. Okay, so there could be events, external, internal events that could be classified as risk or an opportunities. So, whatever events are opportunities, I need to have controls that I can quickly grab the opportunity and grow from there. And rationalize my capital. Need to know where I need to allocate my funds, on what controls or what systems I need to allocate my funds of the entity. Okay. Benefits of ERM. Only if I have an enterprise resource management in place, I will have answers to all these questions. I will have answers to all these questions. Clear? So, that's the benefits of ERM. Please be careful with this question. Clear? Yes, boys and girls, let's move on to the next question. Components of ERM framework. Interesting question. Components of ERM framework. ERM framework. Okay. So, flood in any state, any city, common. Say for example, Chennai floods. Yeah. Story of Chief Minister solving the problem of flood. Now, if anyone wants to solve the problem of flood, number one, what they need to do is, they need to understand the internal environment, which means they need to understand what are the areas that do not have a proper drainage system, what are the areas where the rainfall is very high that get clogged. Yeah. So, internal environment needs to be studied. Second is, I need to set my objective that okay, so far whatever has happened is the past. Now what is going to happen? I am going to take care that these areas are not flooded. Objective setting. What is my mission, vision? Third one, after I set my objective, event identification. I need to find out that okay, if the rainfall is for more than a day, then I have to do some additional measures, immediately send people there, immediately take out water through pumps. So, event identification. Next, I have to assess the risk, loss of property, people, risk assessment. And next I have risk response. risk assessment and giving a risk response. After I give a risk response, I have control activities, information and communication and monitoring, and finally monitoring. So, internal environment, objective setting, identify what are the events, assess the risk, understand what is the response you are going to give to that risk, have control activities in place, and after that, what are the control activities based on your risk assessment, you will decide what are the controls you want to put. After those control activities, you need to inform, you need to give information and communication to the entire organization, and finally, I have monitoring. Monitoring in case of any deviation or where things are not up to the planned level, need to inform to the board of directors and have corrective actions. Clear with the components of ERM framework? Very good. 8 components of ERM framework. Awesome. So, what we'll do is we'll discuss the next part of the chapter in the upcoming session. Okay. So far I hope all of you are doing good. Yes. Thank you very much, guys. See you soon.